Welcome back to the SENB Daily Brief. It's Wednesday, January 7th. Markets are pulling back, institutions are leaning forward, and crypto Twitter is, once again, confidently wrong. Let's talk about what actually matters, starting with the market. Let's get into it.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, Bitcoin pulled back today, trading around 91,000, down just under 3%. Not a breakdown, not a collapse, just momentum cooling off. Ethereum saw a bit more pressure, down just over 4%, hovering near 3150. That's typical in these phases. Bitcoin sneezes, alts catch the cold. XRP and Solana also pulled back, despite everyone declaring the rotation has arrived approximately 12 hours ago. Sentiment tells the real story. The Fear and Greed Index sits at 49. Neutral. Not fear, not greed, just uncertainty. Bitcoin dominance remains elevated at 58%, and the altcoin season index is at 23. Translation? This is still a Bitcoin-first market. Now, let's get into the headlines driving all the noise. That's coming up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. First story. Morgan Stanley has officially filed for spot Bitcoin and Solana ETFs, including staking rewards on the Solana product. Yes, that Morgan Stanley. This is a $1.8 trillion asset manager stepping directly into crypto exposure, which means no, crypto is not dead, and no, this is not just retail gambling in their parents' basement. Why this matters? ETFs open doors, staking rewards open yield, and suddenly, Solana isn't just a tech trade, it's an income conversation. Next, CNBC is calling XRP the hottest trade of 2026. Yes, CNBC. XRP surged more than 20% this week, driven by ETF inflows and renewed utility narratives. Will it sustain? That's the real question. But attention rotating away from Bitcoin while BTC consolidates is not unusual. It's how late cycle narratives begin. Third, MSCI reversed course and will keep crypto treasury firms like Strategy inside its indexes. That's a big deal. Being included means passive fund flows, real money, automatic allocations, not vibes, not memes, money that shows up whether people like Bitcoin or not. Fourth, Wyoming just launched America's first state-issued stablecoin, FRNT, live on Solana. Let that sink in. This is a U.S. state putting dollars on chain, not as an experiment, not as a pilot, but as infrastructure. That's adoption. And finally, today's pullback looks like profit-taking, not panic. Leverage remains controlled, sentiment is neutral, and some analysts are already calling for new Bitcoin highs before month end. As always, predictions are free. Now, before we hit the mailbag, one of today's stories deserves more than a headline. Let's slow this down and actually unpack what's happening with Morgan Stanley. That deep dive is coming up right after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. Yesterday, Morgan Stanley filed S-1 registrations with the SEC for spot Bitcoin and Solana ETFs. That alone is notable, but the Solana filing includes staking rewards, which would make it the first major ETF proposal to do so. This isn't Morgan Stanley experimenting. This is one of the last major Wall Street holdouts stepping in. So the obvious question is, why now? Part of it is regulatory timing. A Senate crypto market structure markup is scheduled for January 15th. Clarity is coming, whether markets like it or not. Wall Street doesn't wait for certainty. It positions before it. We've seen this movie before. In early 2024, spot Bitcoin ETFs were approved. Capital flowed in, liquidity followed, and the market repriced upward. Morgan Stanley isn't chasing headlines. It's chasing flow. Here's why this matters beyond institutions. ETFs remove friction. They let everyday investors gain exposure inside traditional brokerage accounts. Pensions, retirement funds, advisors, all of it. No wallets, no private keys, no learning curve. Which is exactly how Wall Street prefers innovation. Solana's inclusion, and especially staking, is the real signal. Bitcoin is digital gold. Solana becomes yield-bearing infrastructure. That changes how institutions compare assets, not just price, but return. Of course, there are risks. Approvals can be delayed, regulators may push back on staking, and inflows don't arrive overnight. But direction matters more than speed. The takeaway? This looks less like curiosity and more like capitulation. TradFi didn't arrive yesterday. It finally admitted crypto isn't leaving. All right, with that context in mind, let's get back to you. The Proof of Thought mailbag is up next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back, which means it's time for my favorite part of the show, Proof of Thought Mailbag, where logic occasionally appears and sometimes needs adult supervision. First one comes from BTC to Infinity 420. Always a reassuring username. Is this dip the start of the bear market? No. A bear market doesn't start with institutions filing ETFs, state governments launching stablecoins, and dominance holding steady. It starts when liquidity leaves, not when Twitter gets nervous. Next up, Solana Maximalist.eth. Bold, on brand. Does staking in a Solana ETF change the game? Yes, potentially. Yield changes how institutions allocate. Bitcoin is store of value. Staked Solana becomes productive capital. That doesn't mean instant approval, but it absolutely reframes the conversation. This one from Been Here Since 2017. First of all, welcome back from the trenches. Are we late if Morgan Stanley is filing now? No. Wall Street files after retail builds the road, not before. You didn't miss the move. You survived the part where everyone said it was dead. Next comment, why not all in now? The username answers itself. If institutions are coming, why not go all in? Because timing still matters. Institutions scale slowly. Volatility doesn't disappear just because suits show up. Conviction is good. Discipline is better. Last one today, exit liquidity enjoyer. Honesty is refreshing. Is this alt season or another fake out? Right now, it's neither. This is rotation within a Bitcoin-led market. Some alts will run, many won't. That distinction saves portfolios. Good questions today. Thoughtful, mostly rational. We're making progress. All right, one final thought before we close this out. That's coming up after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's wrap this up with some final thoughts. Markets pulling back while institutions move forward is not a contradiction. It's how transitions actually happen. Loud optimism shows up late. Quiet positioning shows up early. Guess which one usually wins? Stay rational, stay patient, stay caffeinated. That's today's SENB Daily Brief. I'm SENB Hero, and we'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit senbheromedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.